been working on a product called Taxbot. And it's a fusion of tools and education that'll make you basically bulletproof from the government. And the goal here is to put maximum tax benefits in your pocket with minimum time. How does that sound? Okay? Now, a little bio about me. I am a CPA. I'm a tax attorney. I'm a trainer for the IRS and the corporate tax division nationwide. So if you think of an IRS agent as a rat, I guess that makes me the head rodent. I'm president of my own lecturing organization, the Tax Reduction Institute, and I've been doing this for over 30 years. I'm a featured tax coach with Donald Trump at the Tony Robbins Wealth Seminars. I'm a best-selling author of the book Lower Your Taxes Big Time, which is a great recruiting tool. If you haven't used that, I want to strongly urge you to do that. The first chapter is something that I think you're going to like. It's why you'd be brain dead not to have a home-based business. And I'm a guest expert on a whole bunch of media, including Fox, CNN, CBS, and CNBC. And I'm not saying this to brag. I'm saying this because I want you to understand that I really know what I'm talking about. Now, one of the biggest questions that I ask people is, where does your money go? And it's amazing how many people don't know it. And there was a study done a number of years ago, and here's what that study shows. For the average American, roughly 20 to 40% of what they make, every single paycheck, every single month, goes out in debt. Now, debt includes all debt: mortgage debt, home loans debt, personal loans like car loans, education loans, any kind of debt. In addition, there's a day called Taxpayer Freedom Day, which is the day that the average person on this line has to work to pay off their federal, state, and Social Security taxes. You know what that day that is? It's basically April 19th. And I had someone at one of my seminars thought it was December 28th. Sounds that way, right? April 19th. Now, what that means is that the average person, if you take what it takes to go to April 19th divided by 365, the average person pays in 30% of what they make every pay period in taxes. And by the way, that's a conservative number, by the way. In addition, if 20 to 30% is debt service, another 30% in taxes, that means they leave somewhere between 30 and 50% of what you make for everything else. Everything else includes things like repairs, insurance, education for your children, retirement for you. So basically all of that, you have to live on roughly 50%. And by the way, I want to emphasize, this 30% on taxes can be a lot more depending on the state you're in and how much money you're making. This is just an average. Now, there's another very sobering statistic. You know, and this was a statistic that was based on a study done at Harvard. And they wanted to know what percentage of people who age 65 could retire with the same standard of living they had before retirement. You know what that number is? It's going to shock you. The answer is only 4%. Which means 4% of the people on this line could retire with the same standard of living they had before retirement. So what about the other 96%? They'd either continue working, live on some form of charity, or reduce their standard of living. There's no other choice. How would you like to be in that top 4%? Because I'll get you there. And by the way, you may have read that older people are working longer. Well, this is the problem. In fact, the post office announced that 3 workers are age 98 and still working. If I had to work till I was 98, I consider myself a failure, to be honest with you. And hopefully we're going to get you to be able to retire at age 65 as well, because the bottom line is tax savings can mean an early retirement. All right, and by the way, this applies to rent, to food, all of these things that we're going to get to. Now, I have a question that I'd like to ask you. Let's say you had a choice, and the choice was you can get a $17,000 raise, or you can save $10,000 in taxes. So a $17,000 raise or $10,000 in taxes each year. Let's say we'll do it each year for the next 10 years. Which would you take? If you said $17,000, you'd be wrong. Because by the time you pay federal tax, state tax, Social Security, those of you in Canada, CPP, you're left with less than $10,000. To give you an idea of how important that is. There is nothing better than tax savings. I mean, the reason is what you pay in taxes exceeds what you pay for food, clothing, lodging, and transportation combined. You know, Donald Trump, I believe, gave a very interesting slide. And one of the things that he wanted to emphasize is that the smarter taxpayer is the wealthier taxpayer. And the slide started off with the question, let's assume I start up with $1 and my equity doubles every year. How long would it take that $1 to be worth $1 million? And it's an interesting question. So $1 doubled at the end of the first year is worth $2, as you can see here on the slide. $2 doubled at the end of the second year is worth $4. $4 at the end of the third year is worth $8. Well, if you run the numbers, you'll find it takes 20 years. But by the end of 20 years, it's worth $1,048,576. Now, all of this assumes that your equity just doubles. You don't pay tax on it. Watch the difference. Let's say same dollar doubling, same starting off with $1, same 20 years, but now you pay 35% of your gain each year in taxes. And when you consider federal tax, state tax, Social Security, capital gains, excise, sales, 35% is not that high. So how much do you think it's worth at the end of 20 years? Same dollar doubling. Here's your answer. It's startling. It's only $22,370. I want to emphasize this. Now, why is it such a big difference? The answer? Compounding. You're losing the interest on the money. You know, Albert Einstein said that compound interest is the eighth wonder of the world. It can work for you by getting your taxes down to the legal minimum, or work against you by overpaying your taxes. You know, I'm sure you know two people or several people who live in the same neighborhood. They probably live in the same models, and maybe they make even the same income or close to the same income. One lives like a king, and one can't figure out how to make ends meet. Why? Because one of them plugged their tax holes. It's that simple. You know, you ask any financial planner, any accountant, and they're going to tell you a very simple truism. And that truism is this: it's never been how much you make, it's how much you keep. You know, if you know what you're doing, you can work half as hard to make the same amount of money. Or you can work twice as hard to make the same amount of money if you don't know what you're doing. It's that simple. You know, I have another question for you. Let me ask you, you ever have a cashback card or use a cashback card? What kind of a cashback do you get? 1%, 3%, maybe if you're lucky, 5%, probably get a bunch of points. What if you had a cashback card that gave up to 45% cash back on almost everything you do? Now, if you had a card like this, would you use it? Of course you would. I mean, you'd be absolutely stupid. Talk about brain dead. You'd be absolutely stupid not to use this card. Well, believe it or not, everyone on this line has this cashback card. It's called your business card. Because if you're in business, when you have tax deductions, that is equal to the equivalent of getting a 20 to 45% savings on everything you can justify as a business expense. And that's exactly what happens when you get a deduction. In fact, to give you an idea of how this cashback card works, you can deduct meals and entertainment, get that 20 to 45% rebate, deduct vehicle usage, deduct home office. You can deduct the equivalent of your kids' college and weddings and education. I'm not kidding when I say this. You can set up a medical plan and deduct braces as a business expense and other things that aren't covered by insurance. Deducting travel. You know, one of the great things about what you do is you don't have any geographic limits to your business. So now travel can become deductible if you know what you're doing. Income shifting and much, much more. But you know what? Every cashback card has a code of conduct. They have rules. They all do. And this one has 3 rules. The first rule is you got to run your business like a business, which means you got to try and make money. You got to have the right documentation. You got to have a good tax tracker. If you're not making money, you got to consult with experts to find out what you need to do to turn it around so you can make money. You have to have an accountant do a financial statement every year and see where you can cut back. It's very important to run your business like a business. And by the way, I do want to emphasize, all of this is found in my Taxbot series. I have over 80 audios on every subject you can think of in tax, and over 130 blogs on different subjects. So I'm giving you kind of a 30,000-foot overview of what we're doing here. And I hope you all have pencil and paper. I meant to say this at the beginning because you want to take notes. This is a very content-rich program, and as you can tell, I move. So you want to write things down. The second code of conduct is you want to document your activities correctly in a tax tracker or tax organizer. That is mandatory. And finally, The IRS and Canada Revenue Agency wants you to pursue a profit. Now, you might have heard, oh, don't I have to have a profit 3 out of 5 years? All the government cares about is you're trying to make money. You do not have to have a profit 3 out of 5 years. But you have to have certain documentation and do certain things that we cover in Taxbot. The key is if you know what you're doing, I want to emphasize a couple things here. If you know what you're doing, you get the backing of the government to help you, because we have 2 tax codes in this country. And when I say that, people think, oh, sure, Sandy, one for rich and one for poor. That's not quite right. There's one to make you rich, and there's one to make you poor. The ones to make you poor are the employees, the working stiffs, because they're taxed on $1, and they really don't get that many in deductions as an employee. But if you are self-employed, not only do you get all the deductions as an employee, but you can write off part of your house, your spouse, the equivalent of your kids' education and weddings. I'm not exaggerating, by the way, when I say that. You can set up a pension plan that I promise you makes any government plan look small by comparison. It is just enormous. And all of you probably have a self-employed business. You should be taking advantage of it. What's interesting is that there are good tax laws passed for small business. And what's great about these good tax laws is that they create deductions with a cash flow that you never have to pay back. Isn't that nice? I'm going to say something that's probably going to make you laugh, but it's true. The government is the biggest bookie in North America. That's true in both U.S. and Canada. And the reason is they bet on you to be successful. Why? So they can get paid for the rest of their life. And the way they bet on you is they subsidize your losses. And how do they do that? If you have a loss in your business, let's say you're a brand new distributor and you have a loss the first year, you can use that loss against any form of income you have. Interest, dividends, wages, rents, pensions, anything. So let's take an example. Let's say you have a job where you make $50,000. You have your business, your side business generates a $10,000 loss. You only pay taxes on $40,000, the net. And that's true in both U.S. and Canada. Let's say that loss exceeds your whole income for the year. You can carry back all business losses in the United States 2 years and actually get a refund from the federal and state government for the last 2 years of taxes that you pay. You actually get a check, by the way. And if there's any Canadians on, you get a 3-year carryback. It's even better for you. Or you can carry forward all business losses in both U.S. and Canada up to, get this, 20 years and offset the next 20 years of earnings. So you never lose a properly documented business deduction. All the government cares about is you run your business like a business and you try and make money. That's all they care about. You're not just doing this for social reasons. You're not just doing it just to, collect gold. You're doing this to try to make money. That's the key. Now, there's a couple of cash drain myths that I want to share with you. First cash drain myth is a question. What's the difference in tax benefits between a brick and mortar business, kind of like a storefront, versus a home-based business? And the answer is none. They are treated exactly the same by the IRS. You get the same tax fringe benefits that IBM can set up for their employees. Here's another question. What's the difference if you operate your business either full-time or part-time? Answer, none. It is treated exactly the same and you get the exact same tax benefits. Now here's another interesting myth. It's only 7 words long. And those 7 words are, my accountant takes care of my taxes. I have a similar myth, by the way. My spouse takes care of my taxes. I equate that with a doctor taking care of our body. Wouldn't it be great if we can eat all the cholesterol and all the fattening foods, and once a year we go to a doctor's office and we get one of these Roto-Rooter jobs? That'd be nice. Another big myth. My mechanic takes care of my car. Those of you who've ever owned an older Jaguar would appreciate that myth. Oh, by the way, Jaguars are the only cars made in the world that had more vertical mileage than horizontal. Now, here's another myth, and this is something that I actually had at a seminar. I gave a seminar with Donald Trump at the Tony Robbins Wealth Seminars, and somebody came up to me and said, Mr. Botkin, I loved your program. It was absolutely terrific. But you know what? I already get a refund every year, so I must be doing something okay in tax reduction. I don't even pay taxes, right? He didn't realize he was getting back his own money. How's that for sad? And here's another startling statistic, by the way. And this is something that really gets to me when I read this. 84% of small business owners overpay their taxes by an estimated, look at this, $150 billion, that's with a B, billion dollars a year. And the more shocking statistic is that over 90% of them, it's actually 93%, didn't think they overpay. Isn't that just startling? It's absolutely startling. Now you might ask yourself, why are so many people overpaying their taxes by so much? Well, the answer is really lack of education and tools. And there's a couple factors here. First of all, you have this time-consuming and extra paperwork. I'm sure your accountant told you to write things down in a tax diary, and you're supposed to do this every day, and that's time-consuming, and it is. But the number one killer probably is procrastination. You say to yourself, okay, I've got to do it. You don't. You put it off. And once you put it off, what happens to those deductions? It's gone. That's a killer. I find people need to have something in front of them showing them what they need to do, or they just don't do it. I've found that time and time again. Every accountant I've ever seen will tell you the same thing. Another reason people lose deductions, that's lost and faded receipts. I can't tell you how many times years ago I would put receipts in my coat pockets. On the way home, when I got home, I'd dry clean them. Guess what happened to those receipts? And now they put receipts on this paper that fades. So all of a sudden, you go in for an audit and you don't have the receipt because it's all faded. They can't read it. A good example of this was in Katrina. Katrina had this big flood in New Orleans. All those people in New Orleans had to report all their gross income that got reported to the IRS, and without receipts, they got no deductions. Think about that. They have to report their income, and they get no deductions without receipts. How's that for a disaster? Mileage log. I'm sure you were told that you have to have a mileage log for your car, but the problem is it's a pain in the neck. You got to write down where you went. You got to write down your mileage. You have to do it every day between personal and business. It is a pain. So a lot of people don't do it, and they lose thousands and thousands. In fact, car is the number one audited area by the IRS, believe it or not. The final reason is you don't know the rules. And if you don't know the rules, what happens? You're scared of an audit. And when you're scared of an audit, what do you tend to be? Conservative. You take less deductions. Does that sound familiar? Well, first of all, I want to emphasize a couple things about Taxbot. Taxbot is a combination of education and documentation. And this is on-demand education for your team that you can save literally thousands of dollars potentially every single year. There are over 80 audio tips on Taxbot that's from 3 to 5 minutes. They include both US and Canada, and over 125 daily blogs. And I do a blog almost every day, Monday to Friday. And we're always adding new audio tips. And they're not just tax. They also include financial. For example, one of my latest ones is how to get in-state tuition for an out-of-state student. You're going to like that one. By the way, I want to give one note of caution. You should never give tax advice to anyone unless you are a tax accountant or an attorney. So let us do it for you, okay? I just want to emphasize that. All right, let's talk about, there's education and tools. I'm going to start talking about the education first. And I'm going to give you some examples of some of the education that you'll find on Taxbot. This is just a small portion of what's on it. Believe me, I'm just touching the surface of it. Strategy 1, deduct all of your meals. And here's my question to you. Who are your potential clients in your business? Who are people that can either become distributors or customers or refer you business? Who? Answer, everyone. Almost every meal can be deductible with the prospect, with a legitimate prospect. Let me ask you a question. Who are your prospects? Are your best friends prospects? Sure. How about your adult family members? Absolutely. Almost everyone you meet can be a prospect, right? Now, another interesting thing in both US and Canada. Both countries allow you to deduct. They have something called associated entertainment. When I say that, most people think I have 3 heads. And that's what it says in the Internal Revenue Code, by the way. What that means is you can deduct your fun. That's what associated entertainment means. Fun. In both US and Canada, you can write off 50% of your fun, and if you pay for your friend, 50% of their fun as well. All you have to do to bulletproof this is to document in your tax tracker that you talk business within the same 24-hour day as the fun. Does that give you enough time? So let's take an example. Let's say I call Ray over the phone, and then I pick him up 2 hours later and we drive to a football game. Is that talking business within the same 24-hour day? Yes. Or we talk business in the car while we're driving to the football game. Is that talking business within the same 24-hour day? Yes. Let's say Ray and I have lunch and we talk business over lunch. And then I say, Ray, you know, it's such a beautiful day. You know, he lives in Florida, so he's got great weather over there. What do you say we go play golf? And Ray says, well, all right, you show me how to play, I'll go with you. And we then go play golf right after we talk lunch. So we went to lunch, we talked business, and then we went to play golf. Is that talking business within the same 24-hour day? Absolutely. Here's the problem. Who has the burden of proof of showing that we talk business during the same 24-hour day? Does the IRS and Canada Revenue Agency have that burden of proof? Or do we have the burden of proof? And the answer is we do, and we do this from our tax tracker or our tax organizer. Here's an absolute documented day that I used to recommend to everyone. I have a paper system that has all the tax questions you need right in front of you 365 days a year. And I've been recommending this for years. Basically, you have to write down 6 things. Who, what, where, when, why, and how much. Who? Nick and Carol Hillman. These are real people, by the way. What? We had dinner. Or it was a business gift. Where? We went to the Palm Restaurant, and then we went to the Ford's Theater to have fun. By the way, the Ford's Theater, you remember that? That's where Lincoln got shot. Still around. When? The date happened to be on the diary. It didn't show up here in the photograph, but it is on the diary. And finally, why? I asked for a referral. And I even put the name of the referral. And finally, how much? $200. Who, where, why, when, and why, and how much. By putting all 6 things, you will never have to worry about an IRS or Canada Revenue Agent audit again. You'll have that peace of mind of never having to worry about an audit, and the government's on your side instead of on your back. Now, the problem is, this is still a pain. You still got to document all this in paper. And if you don't do it, unfortunately, if you don't have the correct records, you are in jeopardy of an audit, which is going to be costly, and you're in jeopardy of not maximizing your deductions, and you will be hit with up to a 75% civil fraud penalty plus interest. And that is why there was an article written on April 3rd in the New York Times. You can actually go to the New York Times and check it out. It's written on April 3rd. The name of the article is Records Crucial When Compiling Business Expenses. They are absolutely crucial. And I want to emphasize a couple of things here, folks. Without it, the government can assess you enough penalties where they can shut you down. This is not something that's nice. This is absolutely mandatory that you need to know. Now, another big problem, lost and faded receipts. It's a huge problem. And by the way, for those of you who think, well, what about credit cards? Can I just use my credit card monthly statement? Here's a surprise. They don't work. Think again, because you need more information than your credit card provides. And IRS loves people who think credit card statements work. And here's another interesting warning, and you can't quite see this on here, but I'll read it to you. The IRS has just put in for a $900 million budget increase. You may have read about it in the newspapers. They want to hire 16,000 new IRS agents this year and next year. 16,000. Are your records ready? Does that sound scary? Well, by the end of the webinar, I promise you will have more peace of mind that you can withstand an audit and more cash in your pocket. All right, here's another strategy. Deducting vehicles. You know, car is the #1 expense probably in most people. And it's also the #1 audited item because it's a big ticket item. It's the most used and the most abused. The problem is, if you don't know what you're doing, imagine throwing $1 out the window every 2 miles that you drive. Do that one time. Go to work or go somewhere, every 2 miles, throw $1 out the window. Assuming you don't have a riot somewhere, you're going to find that's going to get to you. My question to you is, are you documenting your mileage correctly, and how are you currently tracking it? Are you using paper and pencil? Maybe you're using the year-end guess technique, which doesn't work, by the way. Now, first of all, I want to emphasize there are 2 methods for writing off a car. There's the actual method, which we're going to start off with, and then there's the IRS method, which is in lieu of the actual. Now, what is the actual method? The actual method allows you to take a percentage of your car for business. So a percentage of your mileage that you use for business, for gas, for oil, for insurance, percentage of wax, wash, depreciation, repairs, and so on. And the way it works is you take your business mileage divided by your total mileage for the year, and that's the percentage you apply to all these expenses, which means you must have, how do you know what your business mileage is? You got to have a log. You got to keep tracking of it. So in this example, we're assuming we use 20,000 business miles out of 40,000 total miles. That means 50% of our gas, 50% of our repairs, insurance, wash, wax, depreciation can be written off. And that's what that means to you. And by the way, let me give you another tip. That's, first of all, that's the IRS method. I'll give you the tip when I get to the IRS. That's the actual method. I'm sorry, actual. Now, in addition, you also have a choice. You can use the IRS method. Now, what's the IRS method? IRS gives you, well, first of all, IRS gives you, let me tell you what it is, 55.5 cents a mile for every mile you drive for business. If you drive your car for medical or moving, you get 23 cents a mile. It used to be 23.5. It's now 23. It actually dropped. So every time you go to the doctor, you should be claiming 23 cents a mile. You go to the dentist, 23 cents a mile. You move out of state, 23 cents a mile. Charity. This is something that's missed by a lot of people. Every time you do charitable functions like fundraising, you serve on the choir, any other kind of charitable function, you should be claiming 14 cents a mile. And a lot of people miss this. This is a big deal. Now, in Canada, you get on the first 5,000 kilometers, 52 cents a kilometer, and then on 5,000 beyond that, you get 46 cents a kilometer. And here's a tip, by the way, for those of you in the United States. The IRS method is in lieu of the actual method, but you still can claim certain deductions. You can claim parking for your business. Let's say you have to park to see a client. You can claim tolls. And here's something that a lot of people miss. You may want to write this down. You can claim sales tax on your car to the extent it's used for business, and interest. Sales tax and interest. Many accountants did not know that if you use the IRS method, you can also claim sales tax and interest. That's available under the IRS or the actual method. And I can promise you there's a lot of you who probably didn't do that. And you could file amended tax returns if you have the right documentation and claim those things. I mean, I know people getting amended returns, getting back thousands as a result of that. Here's another big tip. You know, a lot of times, by the way, the way IRS method works, let's say you drive 10,000 miles for business at 55.5 cents a mile, that's $5,550 in deductions. And I want you to notice something. It made no difference how old your car was when you bought the car. It made no difference whether it was new or used. It made no difference how many miles you had in that car. IRS still gives you 55.5 cents a mile. So basically, the cheaper the car, the better the deal. And cheap cars, I'm going to back up for a moment. Cheap cars are those that cost under $19,000, and if you drive over 22,000 miles for business, you are probably okay with the IRS method. So I get that all the time. When is the IRS method better? Here's the answer. When you drive over 22,000 business miles and the car costs less than $19,000. If the car costs substantially more than $19,000, you should not use the IRS method. Now, here's a nice tip. Many times you want to do personal trips, such as seeing your mom, or taking your kids to tutoring, or going to football games, taking your kids to a football game, and other types of things, or going to the doctor. None of that's deductible, by the way. But why don't you ask yourself, let's say you want to go see your mom, do I have a client nearby I need to visit? If the answer is yes, you can write off a significant portion of that trip, even though you also went to see your mom. So for example, if you went to see your mom, but it's on the way to go seeing a client or an opportunity meeting, all that mileage is business mileage. And by the way, your mom doesn't have to live in the same city as you. She can live in Hawaii, for example. So you can interview prospective distributors and put ads in the paper. There's a lot of things you can do to convert trips that would not be business to become business. We call that converting expenses from personal to business, or redirecting expenses. That's what it's called. Now, here's another big one. Home office. In 1999, Congress liberalized the home office rules, especially for home-based businesses. And let me give you an idea of how this works. If you don't have a home office deduction, I'm going to tell you right now, you're crazy. You are losing thousands upon thousands of dollars. Let's say you have a house like this. This is a kind of an apartment blueprint. And 1/8 of this is used for business. So we're going to assume that the bedroom, which represents 1/8 of the house, is for business. Now, what does that mean? 1/8 of the utilities become deductible. 1/8 of the interest becomes business interest. 1/8 of the taxes become business taxes, which can reduce your Social Security and Medicare. The other 7/8 of interest and taxes you can take as an itemized deduction. 1/8 of the depreciation is a write-off. Now, people ask me, well, wait a minute, Sandy, what happens if I don't own a home? Let's say I rent. Then 1/8 of the rent in this example would be deductible. 1/8 of the maid service, 1/8 of the alarm service. 1/8 of the insurance, 1/8 of the repairs. All of this becomes deductible. This could be enormous. And I want to emphasize something here. Aren't you paying money for whether for rent or your house's or depreciation or maid service or alarm service or repairs and insurance? Sure. But then what's changing? What's changing is by having a qualified home office and meeting the rules, you can now convert some of what was totally non-deductible to deductible dollars. Does everybody see that? Now, what are the rules? There are essentially 3 rules to claim a home office deduction. The first rule is you've got to use an exclusive portion of a room for business. It doesn't have to be a whole room. It could be part of a room, as long as there's a separate identifiable area. So you want to use an exclusive portion of a room for business. Now, here's the problem. How do you prove that to IRS? The answer is take a picture of the home office. Get those cookbooks out of the bookshelf where the home office is. Get the bridge books out. And whatever you do, don't send the photograph into IRS or Canada Revenue Agency. I was at IRS at the time, and somebody did that with his tax return. And unfortunately, in the photograph, he was making certain undesirable hand and arm gestures. I thought it was funny, but not everyone at IRS has a sense of humor. So you want to show that you're using a portion of your room exclusively for business. Second test is you've got to use a part of your home regularly for business. Now, regular usage means 45 minutes a day, 4 to 5 days a week. It is much more important for you to work your business 4 to 5 days a week on a regular basis than, say, once every 2 weeks for 8 hours. It's very, very important that you have that regularity. And again, how do you prove that? Your tax tracker, your tax organizer. And finally, your home has to qualify as your principal place of business. Now, what does that mean? That basically means 2 tests. Test 1 is you don't have another office where you do any administrative work, like paperwork. Now, for home-based business people, that's not a problem. You don't have to worry about that. You probably don't have another office where you do any administrative work. The second test is where you do the majority of the management or administrative work, which means paperwork, from your office, which I bet you do. So you probably meet that principal place of business test easily. Now, all you have to do is use it as an exclusive portion of a room regularly, and you meet all the rules. In fact, here's a good example. Is a representative who does his paperwork from his home. He doesn't have another office. He now qualifies for home office deduction. Now, let me give you another example. Let's say you're a new distributor, and you pay either mortgage payments of interest and taxes or rent of $2,500 a month. And I bet many of you pay more than that. I want to emphasize, by the way, these are conservative numbers. I'm not being aggressive here. If 1/8 of that is used for business, that's $312.50 in your pocket as business deductions in your pocket every month. And let's say we convert 200 miles a month into business. That's 200 miles a month. Okay, we're talking like 7 miles a day. That's pretty conservative. At the 55.5 cent a mile rate, that's $110 you put in your pocket. Meals, we're going to assume you spend $150 a month on meals and fun. I bet many of you spend a lot more than that, but we're being conservative. You can deduct in both US and Canada 50%. That's another $75 a month that you're putting in your pocket. Total deductions, $497.50 a month. Now, I want to emphasize, a deduction is not cash. Remember I said that rebate card? The rebate card is really somewhere between 20 and 45% of that, depending on where you live and your tax bracket and so on. So in cash, this translates to be up to $175 a month just from the tax savings. And just for 1 month alone, and by the way, this is only 3 deductions. There are hundreds of deductions. I'm just covering 3, and you have an extra $175 a month in your pocket by doing it right. It's just an enormous, enormous benefit here. Now, do you remember when I said that 84% of small business owners overpay their taxes by an estimated $150 billion a year? Everybody remember that? And you also remember that I said that over 90%, that's actually 93% of those people didn't think they overpay. And why? Well, lack of education and tools. First of all, time-consuming and extra paperwork. We went through some of that. You have to write things down in a tax diary every day. Procrastination is a killer, because if you don't have something like a little birdie whispering in your ear to do this, what happens? You don't do it, and then you lose deductions. This has been a real killer for people. in my opinion. Lost and faded receipts. You know, you lose the receipts or they're faded. Horrible problem. And you can't, if you don't have it for an audit, the IRS disallows all of that stuff. Mileage logs. You got to keep a mileage log every day. And you know, that's a pain in the neck. Sure it is. And that's why a lot of people don't do it. And many of them don't know the rules, and then they're scared of an audit. And then they become conservative and take even less deductions. You do what Albert Einstein tells you not to do, which is overpay your taxes and have compounding work against you. And that sounds familiar, I'm sure. Let me ask you a question. What if you had a robot to help you do all of this, to track your business mileage for you, to instantly record deductions, to automatically store receipts, to give you tax tips and strategies in easy to understand language that'll put thousands in your pocket, to back up all your deduction records just in case of a loss, to audit proof your records with simple to answer questions, to motivate you every day to maximize your tax deductions, to prepare reports for your accountant so you don't have to, and help you grow your business. How would you like that? Would you say that would save you thousands of dollars a year? What if I told you you can do this in under 2 minutes a day for all of that? Welcome to a product that I've been working on for years. It is called Taxbot. It is simple and easy, like the cartoon you see here. It works on the iPhone and it works on the Droid. You can even use it on the web. Taxbot is one-touch tax relief. You can reduce your business taxes by saving thousands of dollars. In addition, you can simplify your record keeping with the touch of a button, literally. And I'll show you how. You can safely bulletproof yourself against an IRS audit because IRS has announced, so did Canada Revenue Agency announce, that programs like Taxbot work. They accept digital documentation. They have announced this in a ruling. And you give yourself lots of freedom. In addition, you get to store your receipts. So this will take a snap of the photo of the receipt by pressing attach receipt. You'll answer simple questions and bulletproof you against an audit. Now the way Taxbot works, I'm going to show you exactly how it works in fact. Here, let's assume you have a meal. You press one button, add expense. You then give you a list of categories. And by the way, all of these categories are customizable by you. You can customize it, you can add to them, you can subtract them, fully customizable. Now, what you do, let's say you have a meal. I'm having a meal with Ray. And it'll automatically ask me what, and that was already put in, meal. It'll then ask me the business purpose. And you write down the business purpose. Talked about marketing, talked about trying to get a new distributor, talked about a product. Then I'll ask you how much. You input the amount for your meal. It'll then ask you where. What restaurant did you go to? The date is automatically put on the phone, and who. What's their name? Now, by doing this, you will be audit-proof and you will never have to worry about an audit again. In addition, a lot of times you have receipts that fade. So you press the button, attach receipt. There's an integrated scanner. It's like a camera that you focus on. You take a picture of the receipt. It will store it to the documentation. And watch this. Wherever there's internet, it will wirelessly put all of this information, including the picture of the receipt, on the website, on the cloud, which we store for you. Now, in addition to tracking your expenses, which, by the way, you can do in 20 to 30 seconds. That's all it takes. I've timed it. In addition to tracking your receipts, there's one other very cool thing, actually two other cool things. This has an integrated mileage tracker with a GPS system. Now watch this. This is something that I've been working on for a long time to make it simple and easy. You know, I am not a documentation nut. I don't like writing lots of things down, but I can do simple and easy, and I bet you can too. All you do is you press Add Trip. Well, now once you press Add Trip, you now have this first thing on the left, what you see here. You now press Start Mileage Tracking. And then you're going to see a map like you see here on the screen. You'll see a red dot. That's you. As you're driving around, that dot follows you around. This is integrated with a GPS system. If it looks like a GPS, it should, because it's integrated with it. Now, let's say you get to your stop. You get to your prospect or an opportunity meeting, whatever it is you're going for business. You then press Stop Mileage Tracking. If you have multiple stops, you just press Lap. It takes a picture, but it keeps going. So let's say you get to your stop and you press Stop Mileage Tracking. On the right is what you will see. It will automatically record your mileage. In this case, it's 2.47 miles. It will automatically input the beginning address and ending address. You don't type this in. This is automatic. Store it on the web and compute your business and total mileage for the end of the year. All the records are documented in accordance with IRS and Canada Revenue Agent standard to ensure you will be bulletproof. And by the way, there's one other very cool feature in Taxbot that you're going to like, and this was suggested by a networker to me, actually. In the front of Taxbot, it lists what your deductions are in real time every day. For example, as of January 28th, 2012, I generated $1,074.14 in deductions. Here's my point to you. If your representatives see this, if your distributors who see this, when they see this, how much they're accruing every day, what do you think is going to happen? They can't afford to quit, because the minute they quit, this stops. This is like a meter showing them how much they're saving. It is, I think it's absolutely ingenious. It'll reduce your attrition. That's the point. You know, if you take your business seriously, your distributors will take it seriously. And this is really a fabulous tool. Now, in addition to all of this, you also get full storage on the web. It will eliminate paperwork and save you time, and you're going to get tons of both. In fact, this secure storage, you track it, we store it. The records are stored with bank-level security according to IRS standards. It edits you can edit the records and download the reports anytime you want, 24 hours a day, 7 days a week where you have internet. You can track all the expenses, all the mileage, all the receipts, and it integrates with your current record-keeping or appointment tools. In fact, you can even use it as a budget. If you want to see how much you're spending, you can input your personal expenses. You can check off the box personal for those things and actually see what you're spending throughout the year and use it as a budget. By the way, I want to emphasize something about Taxbot. Taxbot is kind of like a BMW. There's more under the hood than it appears. Let me give you an example. I mentioned that we have storage, and there's a lot of people that tell you that we back things up. We back it up, however, in several different locations in 2 different cities. How's that for backup? I mean, you'd have to have an atomic war to lose that stuff. I mean, we really back it up. Now, in addition to all of this, Taxbot gives you my training on demand. I lecture all over the country on tax reduction. And you will get 24-hour, 7 days a week access on demand to 3-minute audio tapes. That's going to teach you all kinds of things, including how to write, these are just some of the titles, how to write off your car expense, including business mileage, how to write off the equivalent of your child's education and weddings. I wrote off my daughter's 5-year undergraduate curriculum in web design, and you'll see why, and how to do it. How to deduct 100% of your medical expense as a business expense. How to deduct your fun and entertainment, including season tickets. What's that worth to you? Here's one that you're going to like. How to double deduct your business equipment. How would you like to write off all the equipment you're using in business or in rental property twice? Not once, twice. How to turn your vacation into a tax-deductible event. How to create a retirement plan that I promise you will beat any government plan. How to keep your records bulletproof against the IRS or Canada Revenue Agent audit. How to reduce your risk of an audit. Tips on what to do if an IRS agent contacts you, and a lot more. It also will include financial tips. I have a new book coming out on financial planning that's going to include all kinds of financial stuff on the site. So with one touch, basically you get the expense tracker, you get the document, the receipt tracker, and you get the integrated mileage log with the GPS system. Not to mention the fact that you see exactly what you're saving. In fact, as of here, they save $4,261. In addition, you get me. You get all of my audios, you get all of my blogs, you get my articles, you get a tremendous amount of material on what you need to do to reduce your taxes. And I promise you, you get one thing, one idea, it can be worth thousands to you. This year, next year, and the year after that. It's like an annuity. And you get the storage on the web with absolute backup. Now, how do you recruit, retain, and make money? I get that all the time. There's 3 steps. Step 1, get signed up with Taxbot and do it now. Number 2, start saving thousands of dollars yourself. And once you start saving money, now step 3, show your recruits and prospects why they can't afford to quit. It's just a fabulous tool. We are getting all kinds of testimonials on this. People love it. You know, you have a choice. You can spend 2 minutes a day complaining about taxes or 2 minutes a day reducing them. One will cost you aggravation and money, and the other will make you a lot of cash and bring peace of mind. You have two choices. You can complain about taxes all the time and how much you're paying. You can overpay your taxes. You can worry about an audit and tedious record keeping, or you can succeed by lowering your taxes, save thousands of dollars, stay audit proof, and easy record keeping. I want to emphasize something here, folks. This is not a nice to have application. This is not even a should have application. This is a must have application. Why? You all have homeowners insurance, right? If your house burns down or you have a tornado, your house is destroyed. I mean, it's a disaster for you. Same thing is true with car insurance. You probably haven't used your car insurance that much. But if you don't have one and you get into an accident, you're in bankruptcy. You could be sued for millions. With IRS, it's the same way. You don't have the right documentation, and I see distributors like this all the time. If you don't have documentations that right, IRS will hit you with a significant enough penalty to basically put you out of business. You put a lot of money into this business. I'm sure you put a lot of time into this business. It seems this is a must deal. So the benefits to you is increased retention, incredibly easy documentation. Basically, you get a business in a box. I mean, it's really that simple. You save thousands of dollars on taxes. You will take your business more seriously, which means your distributors will take it more seriously. Bulletproof your records in case of an audit. More apparent cash flow quicker, because new reps will see they can't afford to quit. It's right in front of them. You'll get more support from your spouse because they take deductions too. Stronger proof that your business is a business and not like a hobby. That's a big deal. And customized reports for you to achieve your financial goals. Now, what's the price? It was in our website. It's $19.99 a month, but Ray kind of beat us up. It is only $9.99 a month. And as I mentioned, this is a must. This is not a should be. For $9.99 a month, you get all of this. And it's not even $9.99. Why not? Because you get that 45% rebate card on this. So it's really 45% less. This is fully tax deductible. To take advantage of this, go to http:// and you see it right here, rayhigdon.com/taxbot. He set up a URL for you. That's http://rayhigdon.com/taxbot. This, I promise you. Oh, by the way, Taxbot comes with a guarantee. This is so good, and we're so confident you're going to like it. Here's the promise. If you don't accrue deductions worth 20 times what you paid in the first 30 days alone, simply call and cancel for a full refund. First 30 days. You know what that is? That's a return on investment of 20 times your money every month. 20 times. You got a deal that gives you 20 times your investment. You come call me. I haven't found that yet. This one does. We're guaranteeing it too. In fact, there's no contracts here. If you want to quit at some time later on, after a year or after 6 months, feel free. When you get enough deductions, feel free. You can quit anytime you want. But in the first 30 days, we even guarantee you'll get 20 times, or you can get your full $9.99 back. How's that for a guarantee? So this is a risk-free deal. Hopefully, I've convinced you of the horrible mistake of overpaying your taxes. And I apologize to anyone who doesn't get it, because I promise you, you're going to pay a lot more in taxes for the rest of your life than the people who do get this. Okay, anyway, go to rayhigdon.com/taxbot, and I'm going to turn this back to Ray.
Hey, Sandy, wow, that was freaking amazing. I mean, I already downloaded it, and I'm looking at it right now, and I'm seeing dollar signs. I mean, this is a no-brainer. It's an absolute no-brainer.
It's no-brainer. 20 times guarantee, 20 times your investment. Where do you get a return on investment like that?
And I'll tell you, it's funny too, because I mean, I've just trying to track, and I'm dealing with my CPA right now, and I have to go back through a lot of paperwork and crap. I can tell you, this is such a perfect time. Man, I wish I would have found out about it last year or the year before, but I guess it didn't exist back then. Sandy, we have a couple questions. Is it possible? Can I snag a few more minutes from you?
Absolutely. By the way, if you have questions, please type them in for Ray. He'll be reading them to me, and I'll be glad to try and answer the questions.
Yeah, absolutely. So we got a couple, but yeah, if you're out there and you have questions, please ask away. And so first of all, we have my man Fernando. Welcome to the call. He says, can you deduct the phone and phone service and the service tax bot for your home business?
All right, Taxbot itself is fully tax deductible, so make sure we understand that. That is one of the only applications offered that is fully tax deductible. The phone itself can be deductible to the extent it's used for business. You'd have to keep some kind of log, and that also applies to the cell phone. Well, the cell phone, generally you get to show that you're using it for business, but as long as you're using it for business, there's some new rules that came in the government. If you were a corporation, then you get an automatic deduction for the cell phone and the cell phone bill. If you're self-employed, you got to do a little bit more. You got to show what was the business usage. You can do this by your cell phone bill, crossing off everything that's personal. You can do it with a log. There's a lot of ways to show what percentage of the phone bill was for business, and that's the percentage of the bill that'll make deductible, as well as the phone itself.
Gotcha. Okay. And my friend Shelly here is asking, does it work on an iPad?
Yes, Shelly. It works on the iPhone and the iPad too. I've tested it on the iPad too. That's what I use it for. It also works on the Droid. My wife has a Droid, and the Droid tablet. So it works on those things. The only thing it doesn't work on yet is the BlackBerry. That's the only one. So if you have a BlackBerry, it's not going to work on a BlackBerry.
Awesome. And again, if you have any questions, I mean, at $10 a month, I mean, it's just, kind of crazy. Maybe that's why there's
Which
not
is tax deductible, by the way.
which is tax deductible. I mean, it's just awesome. You know what I love? I mean, I love what you said about, we travel a lot. We go and visit family and do different things. And here's what's funny, and I haven't even been doing this, but everywhere I go, I mean, we've been to, Chicago, New York, Phoenix, Vail. Every single place, I've actually met up with a team member. I've met up with one of the reps, and man, I could have been writing this stuff off that I thought I
You're
could.
writing this stuff off like crazy. When you think about how much money, it's funny. I have people who go on Taxbot, and the number one comment I get is, Sandy, I am really ticked off. Why? You just made me realize how much I lost over the last
Yeah,
bunch of years I've been in business.
absolutely, man. I had no idea. And we have a question here from Philip. I think since maybe you mentioned this, but he says most distributors do not have their own corporation, LLC, etc. For new distributors to seasoned distributors, basically, at what point would you suggest incorporating?
Generally, I do not recommend incorporating at the beginning. And the reason is I don't recommend it is you want to start your business, you want to learn your business, you want to learn about how to promote your business. That's enough to worry about. When you're a corporation, you got to do all kinds of formalities, and even worse, at the beginning, normally businesses generate a loss. I mean, sometimes you can generate a profit, but generally they generate a loss because until you learn your business and start making enough income. If you're self-employed, you can use that loss individually on your own tax return, whereas if you're incorporated, that loss tends to be locked into the corporation more. So I do not normally recommend you start up with a corporation. Now, once you start making money and you start making 50, 60, 70, 80,000 a year and up, then it might be worth forming an S corporation or so. But even then, there's a lot of formality that I'm not sure you want to do.
So, based on your response, I'm hearing that whether you have a corporation or not, you can still use TaxBot.
Oh, absolutely. Taxbot's available whether you're incorporated or not, whether you're an LLC or not, or self-employed or not. In fact, it even works for employees who have to keep track of their expenses in order to get reimbursed by their employer. It even works for them too.
Oh, that's awesome. All right, so any more questions? We only got a couple minutes left here. Please throw them in there. We have a couple people saying thanks, a couple people saying awesome webinar. My friend Jesse said it looks amazing. I think we got a few people gonna go ahead and download it. And so
Folks,
I
I
appreciate you.
promise.
What's that?
Yeah, I'm going to promise you that this is going to put thousands in your pocket. Not to mention, it'll keep the IRS in Canada off your back. In fact, they'll actually be helping you. This is probably going to be the best $9.99 a month you've ever paid.
Absolutely. Well, we definitely appreciate you. We have more people. My man Felix is saying this is great. Thanks. I mean, it just simplifies. I love the GPS, man. You mean I just get in my car, I flip a button, and when I arrive, I flip another button, and I mean,
That's
it's
it.
crazy.
Right, it stores it for you, records it for you, even gives the beginning and ending address for you, as long as you're in a place where there is an address. I mean, because if you're in the middle of a lot, it'll probably give the longitude and latitude or something, but it will give you the addresses for just about everything you go, beginning and ending.
Man, that is just awesome. Well, Sandy, I definitely appreciate you, and it's awesome actually to finally talk with you in person. I've been recommending your stuff for years and years and years, and just awesome. We have Amanda here. She's saying, "I can't believe how great this is. Thank you. You are welcome, Amanda, and just thank you, Sandy, for jumping out here for the people on here, and definitely appreciate you, my man."
It's my pleasure, folks. Well, hopefully, with this, you're going to make your lives, in a lot of ways, a lot less taxing.
Nice, nice. Well, all right, everybody. If you want to go and check it out, go to rayhigdon.com/taxbot. I can tell you without a doubt that I have it on my phone right now, and this may be the most exciting. Well, you know what? It is the most exciting app that I have, and I think this thing's going to make a bunch of people a bunch of money. So I definitely
I
appreciate
think
you,
so too.
Sandy.
My pleasure. By the way, I want to emphasize you can download it for free, but you will have to activate it. You have to give a credit card to activate it. But again, that first month is completely free. If you find it doesn't produce 20 times what you paid, you get your money back. But you will need a credit card to activate it, just in case you have a problem.
Oh, that's awesome. So excellent. Well, thank you so much. And if you're on here, be sure to say a little mental gratitude towards Sandy for jumping out here and spending his quality time with us. And get that app if it makes sense for you in any way, shape, or form. Just awesome. Oh, we have a question from Ryan. He says, "My wife and I each have our individual businesses. Do we need two separate accounts?" I would
That's an
assume,
excellent that's
yeah.
an excellent question, Ryan. The answer right now, I'm going to give you well, TaxBot. You both can put in expenses. The problem is IRS insists that that if you're both in business, you have to have a separate Schedule C for each of you. And the problem with using TaxBot for both of you is that it's all going to be in one report. You won't be able to split it up between your two businesses. Second problem is right now it doesn't have you can only use one card at a time. It can't track both cards. I will tell you that. So the answer is you're going to need a separate account for each of you and your wife. That's the right now answer. Here's the good news. We are working on updates in TaxBot. And among the updates, which by the way are free, it's all included in the $9.99 a month. The programming I'm doing is all included. The updates will allow for two separate accounts as part of the same price. It will not be more money. It will be two separate accounts as part of the same price, which means you can show two different businesses as part of the same price.
Wow, that's just awesome. I mean, I
That's going
would
to be in our
think,
update.
if you have two cell phones, you would kind of need, to be able to track them separately. But I don't know if I'm thinking wrong there, but that
Well,
makes
right
sense.
now you have to right now you have to do that. But until we do the update, and the update's going to be at least 6 months to a year. But right now you do need separate accounts because you're right, two separate cell phones, two separate tracking. But once we do the update, then you'll be able to do it even on two separate cell phones, and you'll still be able to track two cars at the same time and two expenses at the same time with each for your cell phones.
That's awesome. Now, just curious, I know that I'm spending this year because we didn't have this, but this year I'm spending many hours, even though I have a CPA, even though I have a bookkeeper, I'm still spending a lot of time on my taxes. Can you give us a glimpse of what will next tax year look like?
It's hard to say. My crystal ball is broken, by the way. But I do want to mention one thing about TaxBot. If we're right now in sort of almost, I won't say the middle of the year, but we're certainly past the first few months. You can retroactively go back on TaxBot on the website and input your expenses that you missed. You can do that. TaxBot is fully customizable, and anywhere you have internet, you can do it through your phone. You can do it through a computer, as long as you have internet. So anything you missed, you can then go back and input it into TaxBot. It will store it, prepare reports for you, summarize it for you, do all that stuff for you.
That's awesome. Well, crystal ball or not, I believe it's going to be less time for me next year, and that is what excites me because time is money. Well, I
No, no
appreciate you,
question.
Sandy. We're going to close it out here, and we already had a couple people say that they already got it, and so I appreciate you serving the network marketing community, and keep rocking it out, my friend.
It's a pleasure. Nice meeting you.
Awesome. All right, guys, well, have an awesome night, and we will see you around. Bye bye.
The organizer has ended the session.